Hello, Seasonal Vantage Insiders. This is Alex from MarketWise Asia. Thank you for watching this video. So as I'm doing this video, the time now, it is actually 29th of January, okay, at about 2:30 a.m. in the morning. Okay, this is Monday, early morning over here because I have a few appointments in today's afternoon. So I don't think I have the time, okay, to do the updates for you guys in the afternoon. So I think I better do it right now, okay? So to give you guys a very quick update on what's happening in the market, and of course, the usual trade ideas over there. So as usual, a disclaimer first, whatever I share in this video is just for education purpose, not a recommendation to tell you what to buy or what to sell. So let's kickstart this session right now. So I think there are a few things that I want to go through. Okay, the first thing is actually the stock market right now. Okay, and we are actually approaching the end of January, heading into Feb already. So February, okay, based on the seasonal data, February it is actually a better month. Okay, the return is actually better than January. Okay, so this is how the January market look like now. So I admit that I am wrong. I'm wrong because I am expecting price to come down, okay, in the month of January, but price didn't really come down, a lot lower. In fact, price continued to go higher. Okay, so of course some of the shorts that we initiated, they do have some losses, but there are some shorts that did pretty well. So all in all, I think we are still doing quite okay. Okay, all right, then I'll go through some of the stocks that I'm still holding and such, but I'll go through this update over there first. So this is the February better month. So in fact, if you look through the seasonal data for the S&P 500, okay, this is the data from Equity Clock, okay, for the past 20 years, okay, until end of last year. You can see that, based on this data, okay, this chart, right, towards the end of January, towards the start of Feb, okay, February is typically a better month, and it tends to peak at about mid of Feb before the market start to turn down lower. This is the composite chart for the past 20 years without taking into effect of the election year, okay? But the chart that I have been showing you guys is actually this, right? Okay, this election year data for the past 40 years, okay? Over the 10 cycles, okay? For the past 10 election year cycle, you can see that January tends to go down, okay, and February, even though it is not really going higher, but it is a better month than January, kind of choppy, okay, and then before about March, then it starts to go higher, which means, okay, that whether you go into the election year or the for the past 20 years without considering into the election year, okay, or the composite chart, okay, we can expect maybe at least mid-Feb to the start of March, then the market might start to turn bearish again. Okay, so as such, right, okay, I will still right now put my focus into the bullish setup. So don't want to fight the trend. So as in proven that I'm wrong, but of course, I want you to take note also that right now the S&P and the Nasdaq, they are also actually overbought right now. But if the market wants to go higher, then who else is to stop them? Okay, all right. So the time where I'm going to turn so-called short-term bearish, maybe towards the mid of February or at the start of March. Okay, and if you take a look at the current key indices right now, the S&P, right, there is a I remove this indicator first, my stop loss indicator. Okay, you can see that the S&P 500, it has a pin bar, okay, which that I don't like this shooting star pin bar pattern. And for the Nasdaq, there's also this shooting star pin bar. So all in all, I think that there are traders who still going to go for a short and might get trapped because of this pin bar and might continue to go higher. So as of now, okay, my bullish bias, okay, let's continue this bullish bias. I mean that I will still look for the bullish setup, okay, and won't be looking for short setup as of now. Okay, all right. So and previously last week I mentioned that I entered a trades over there. So the one that I mentioned is actually DBC. Okay, price has gone up. Okay, I've exited DBC. I first mentioned over there, entered here, and then exited DBC. My reward to risk, okay, it is actually 1.5R. So it's doing good. Okay, and then the other one I'm still holding for a short is actually EWI. Okay, and on last Friday, price actually went higher again. So price has been kind of a ping pong, okay, ranging ever since I shorted. So again, I don't know how it will pan out. Okay, so I'm still holding on to it. Okay, and then JPM, this is the only long stock that I mentioned. So I mentioned over there. So there's a price have a watch and risk, see whether price can stay above the watch line. Okay, and price has been going higher. So I'm not sure how many of you actually taken JPM. So just curious. So if you actually went long on JPM, just give me a shout out in the comments over there. Okay. And the other one is actually Gentex, GNTX. This is where I told you guys, okay, the earnings. So I thank you, Clara, for letting me know that there's earnings. So I actually do a updated post sharing with you guys that I don't want to hold through earnings. So even if I really enter, so I actually didn't enter Gentex lah. Okay, but after I mentioned about this wash and rinse setup, price actually did go lower and hit the lower range of the central pivot range. So actually, if you really entered a short, there is some profit to be made as well. But of course, you need to exit before the earnings date. Or else you lose quite a bit of money because price gap up quite high over there. Okay, so that's the reason why I don't like to hold through earnings, because anything could happen. So for Gentex wise, right, price actually hit, I think it's above the expectation. That's why price gap up. So this is the few stocks that I mentioned last week. And of course, there are a few questions regarding ever since I posted the market update. Okay, and then here, okay, I don't have the time to answer them. So that's the reason why I'm addressing this right now. So Kelvin is asking, right, the NYSI chart, okay, is curving up and turning black. Does that mean in the short term the market outlook should turn bullish? So this is the NY chart that he is talking about, NYSI, the McLaren summation index. So he is talking about this hooking up and turning black. Okay, yeah, I would actually prefer if price the hooking up happen at the low over here, there'll be more inclined to go long over there. Okay, more bullish lah. But right now we are still relatively at a high. But yeah, judging from this hooking up, okay, there's a possibility that price could go higher, which means that okay, the market can go higher. Okay, right? Yes, there is. So overall, the market, it is still bullish. Okay, short term wise right now, okay, it is bullish as shown in the chart that S&P find. They are really bullish. But what you need to prepare is that price could do something like this. Price hit the EMA there, okay, and then reverse back down, price hit there and then reverse back down. Maybe price could hit over there and then start to come down. Okay, but we will know. But as of now, as I mentioned, okay, I think I would still prefer to go for a long side, because as it has been proven for the past 2 or 3 weeks, the market is actually not coming down, and February market tends to go higher based on seasonal data. So maybe if I were to turn bearish again, that will be at least mid of February or into at least early of March. Okay, so as of now, let's continue to look for the bullish setup. Okay, this is the one. And then NYSI, I think Mary also asked, how do I insert the copper gold chart on TradingView? So this is Mary. Okay, how to get a copper gold ratio and times 100 on TradingView. Okay, so based on the Beanie setup that she mentioned, right? So this is how she did it. I think she's using the copper and gold from capital.com CFD data over there. So you just go search for copper. All right, you'll find this copper com, which is in capital.com. Okay, CFD data commodity, right? But if you use your mouse, okay, and click on copper, right, you go to the chart itself, right? So you don't want that. So go back to copper, you search for copper, all right, and then you use the arrow key heading down arrow key. Okay, go down, you see the copper, you just go there and you will see this copper being shown here. So after that, what you need to do is just to do a slash, okay? Hit on the slash button and then search for gold. Key in gold, G-O-L-D. All right, so since we already use the copper, use the capital.com. So for gold, we also use back the capital.com. So you just hold down on the gold key, click on the gold key, okay? Not gold key, as in click on the down key, click on the down key, okay? And then you go for gold, and then you just hit enter. All right, this is the gold chart, but of course you can see that there is a lot of zero over here. Like what Beanie mentioned, you want to times 100, so to remove the many zero. So go back to over there, okay, and then you do a bracket. You do a bracket, okay, and then you times, which is asterisk 100, and then hit enter again. They can see that this is the ratio. All right, so 0.18 is what Beanie is looking at. Okay, so for me personally, right, I like to look at the real price, the real gold and copper price, which is the futures price. So for me, I like to go to HG. HG is the ticker symbol for the copper futures. So once again, you hit on the down arrow key, okay, and then, all right, you slash it, and then you type gold. Gold is GC futures, right? And then you hit the down arrow key again to hit gold, and then you just hit enter. This is the copper and gold based on the futures price over there. And then once again, you go back to the ratio, and then you just put in the bracket, okay, and then you asterisk 100, which is times 100, and you hit enter again, and then this is where you get the ratio chart. Okay, you can plot the 0.18 line over there. So this is what I prefer to use. So whether you're going to use the CFD data or use the gold future price, I think that is fine. I think the difference should not be that much over there. Okay, so this is the copper and gold. And Im is asking, right, so DBC is in the list of PTP. Yes, it is in the list of this publicly traded partnership price. So previously, there's a news saying that, if you trade the PTP list, there'll be a 10% withholding tax, okay, from the gross profits from the sales of PTP, okay. But actually, based on this Tiger list, right, PTP, as in DBC, is actually one of the exemption, okay. You can see that tax exemption, yes or no. So you just now mentioned that the DBC, okay, it is under tax exemption. So you won't be having the 10% withholding tax on if you traded on DBC. And just now I mentioned, right, I've already exited DBC as well, so there's no tax. So I'm just getting my full profits from the DBC trade. So I hope I answered your question, okay, from Kelvin, Im, and Mary. Okay, so let's head over to next one, Tesla. Okay, Tesla, okay, if you have been following the market, Tesla actually dropped about 14% last week, okay, from the top to the low over there. So, because of the guidance of the earnings over there. So this is the Tesla chart over there, okay. So it gapped down over there. Okay, so it gapped. Okay, so I think there's a window of opportunity right here for Tesla. Okay, so I'll show you the data first. So for Tesla, okay, the favorable period is from the 24th of Jan to 6th of February. So for the past 12 years, okay, there's a win rate of 82%, which means that of the past 12 years, 10 years, it is positive. Okay, the reason why this Tesla data is not in your Excel sheet is because, okay, the winning rate is less than 90%. So typically less than 90, I will include that into your data list, because else there's too many stocks out there for you to sift through it. So it's not inside. Okay. All right. And if you look at this Tesla chart over there, okay, this is a seasonal trend with Tesla, I think for the past 13 years, because Tesla was listed 13 years ago in 2010. So can you see that there's this window of opportunity? You can see that, at the end of January towards the start of Feb, okay, there's this favorable bullish period there. So I think, okay, there is a window over there. So this is the Tesla chart over there. Okay, so of course, there is a wash and rinse pattern, but the wash and rinse line is very far away. Okay, here is the gap down. So price close, the prior day low is actually here, very far away. Okay, the low is actually 206.77. Okay, 206.77 is very far away. Okay, so obviously you don't want price to close above the wash line. Then you enter, is too late already. Okay, so as such, okay, how do you enter that? Okay, I'll be zooming down into the 1 hour chart. Okay, typically, okay, I don't go into the hour chart. Okay, but this is a rare case. Okay, because I want to find a potential entry trigger into Tesla. Okay, so the wash line that you can see here is actually over there. Okay, this is the bar, the hour bar where price closed below the prior bar low. Okay, so the low, it is actually 185. So this is the wash line over there, 185, based on the hourly time frame. 1 hour, 1 hour time frame over there. Then you may be asking, hey Alex, I can see the wash line over here. Okay, price closed below the prior bar low. Also a wash line over here, price closed below the bar low over here. Why don't you use this wash line over there? Okay, the reason is actually pretty simple because price gap down, okay, and then there's a huge bar. Okay, a lot of people are shorting into here. There will be traders shorting into here. Okay, all right, and then based on the volume, there's a relatively higher volume compared to the rest of the volume over here. So I think this bar, it is actually a more significant. Okay, and then of course the wash line from here to here, it is actually not a lot of difference lah. So let's use this bar over there where there's a lot more volume, more significant, and then there's a huge down bar over there, and then this become the wash line. Since there's not much difference between from here, okay, from here, okay, to here, not much difference. Let's use just this 185 as the wash line. So I would love to see if price can stay above the wash line, okay, at 185, and then price can go higher. Okay, all right. So price need to stay above 185. Of course, towards the end of the day, price can go down lower lah. So we never know. So typically, I'll enter after 1 hour, 2 hours or so, and see whether price can stay above the 185. Okay. And of course, if you are using, for example, IBKR Interactive Brokers, there is this thing called the conditional entry, which means that, okay, you can define how you want to enter based on certain conditions. So for example, you only want to enter, okay, when the time is at 3:45 p.m. US time, towards the closing, 15 minutes before the closing, okay, only when time is at 3:45 p.m. and only when price is above 185, then you execute a market order, go long. You can do that. Okay, like for example, 3:45 p.m. if price is above 185, then you go long. Okay, but okay, it is very difficult to do your position sizing and also where to set your stop loss level, because we never know where price could be at towards the end of the market day. Where what if the price this is a daily time frame again, what if the price gap up here, okay, or maybe the market market is stuck at somewhere around here, and then towards the end of closing, price go up a lot higher. Okay, then it's very difficult for you to do the position sizing and then where to set your stop loss. Okay, all right, because it go a lot higher. So for me personally, I would just and if price can stay above 185, after the first hour or the second hour, then I will consider going long for the Tesla. Okay, so let's see whether price can stay above 185, okay, on Monday onwards. Okay, it can happen on Monday, it can happen on Tuesday, or whatsoever. Okay, all right, so price need to stay above 185. They'll be more inclined to go long and to go for this window of opportunity for the Tesla over there. Okay, this is Tesla, and and let's head into our data right now. The data that that I'll be looking at, okay, for this week, it is from the 28th of January to the 4th of February. Okay, let's go to the ETF first. Okay, there's a lot of ETF also, like 24th of to 28th of Feb to 4th of January. So there's a lot of ETF until Feb cross. Okay, for stocks also a lot of stocks, for a lot of stocks over there. So from the 28th of Jan, okay, there's a few hundred stocks over there. Okay, I already pre-filtered. Okay, and then until Feb, there's also a lot. All right, so yeah, but one key thing I want to share with you is that, based on this, you can see that on the Feb, right, there's one industry that stood out. It is the mining and steel. Sorry, yeah, steel, the metals and mining, okay, and such metal and mining. Later I'll go through that. SLX. So the one that I'm interested at is actually VAIL, IPGP, FDP, and XLI. So for VAIL, okay, very similar to SLX. This is based on the metal mining. This is the steel mining. Okay, VAIL. So this that go to VAIL over there. VAIL. Okay, so you can see that I already write the wash line. So you can see that this is VAIL. All right, so you can see that price over here, price closed below the prior day low. Okay, and then on Friday, price actually closed above the high over there. So you can use the stop loss indicator that I provided you over there. So let's assume that you entered, okay, maybe you give a limit order on Monday, you enter at 14.17. All right, so your stop loss will be at 13.74. 13.74. Okay, just below, somewhere around at the cloud level over there. It's not at the swing low, it's based on the 1.25 ATR, it is over here. Okay, then your take profit level will be at 1 hour over there, 1.5 hour at about 14.8. Okay, so I'll be quite inclined to go long on VAIL or SLX. Later I'll go through with SLX over there. So this is VAIL. So let's see whether price can go higher for VAIL over there. Okay. Okay, since I'm to the metals already, right? Let's go into VAILs, right? I didn't go through the VAIL data. The VAIL data, it is actually give me a moment. I find this is this ETF. Sorry, this is VAIL. VAIL over there. Oh yeah, okay, VAIL, that's fine. VAIL, okay, VAIL, it is okay, VAIL, right, from 31st of January to 14th Feb for the past 16 years, 94% of time it went higher, which means of the past 16 years, 15 years it went higher for VAIL, okay. And the one that I'm looking at is also SLX, still. SLX is still. So for the ETF for steel, it is actually here, okay. 1st Feb to 20th of Feb for the past 10 years, 100% of the time it went higher. Okay, for SLX over there, so SLX, very similar price action, SLX. Okay, so can you see that, this is the wash line over there also, wash line, okay. All right, price stay above the wash line on Friday. Okay, the wash line. So here, the wash line is 69.37. So let's assume that you enter at 69.85, a limit order on Monday or so. Okay, maybe we can get a good price over there. Okay, and then your stop is somewhere at the low of here, the swing low over there. Okay, 68.60. So let's see whether price for SLX still can hit higher. Okay, in this coming week or so. This is SLX. Another one that I want to say is IPGP. This is, I think it's a semicon. IPGP. Let's remove this indicator now. Okay, IPGP. Over there. So the wash line I've already also drawn over there. So market has been coming down. Okay, and then there's a huge bar long shadow over here. Okay, price cannot go down lower and then starting to drift higher. Okay, of course the immediate resistance will be at the pivot point, which is at 104.63 over there, 104.63. But I can see all in all, there's a wash line. price stay above the wash line over on Thursday, price stay above the wash line on Friday. So let's see whether price, can continue to head higher over there in this coming week. But of course, the immediate resistance is at the pivot point. So if price can hit the pivot point, okay, do consider taking some profit over there. All right. So I expect price to find some resistance area at the central pivot range at the pivot point over there. All right. This is IPGP. Another one that I'm looking at is FDP. This is FDP. This is Del Monte. FDP. If Del Monte, let's go to the data over here. So Del Monte FDP. This is ETF again. Sorry, this is FDP. Okay, FDP is over there. So FDP, okay, for 31st of Jan until 13th Feb, for the past 10 years, 9 years, it went higher. So you can see that while the market, it is generally, bullish, Del Monte since the start of the year has been coming down, okay? And right now we are at the area of interest at the pivot point. At the pivot point, price cannot go down lower. And right now we are at the favorable period right now. So again, I already pre-drawn the wash line. Wash line is at 25.08 at the 25.08, this dotted line over there. So price closed lower, and then on Thursday, price closed higher. On Friday, price closed above the wash line. Okay, so let's see whether price can hit higher, okay, in this coming week. So this is a fresh Del Monte. So of course, there is a lot of stocks in this month, because as I mentioned, right, typically on February is a more bullish month than on February. So that's the reason why in January onwards, late Jan, there's a lot of stocks are favorable period right now. So but these are the few that I've just sieved out for you guys, just a few plus the Tesla, okay. And if there are any more stocks that's interesting or there's more setup or trigger, I will update you guys in the members area again. So I think for now, just a few stocks, just trading a few stocks is good enough. Okay, we still need to wait for the right setup, right trigger to enter. Cannot anyhow enter, even though there's a lot of stocks out there in this list. So I wish you guys a very a good week ahead and a safe trading week ahead. So if there's any updates again, I will update you guys again in the members area. All right. Thank you. Bye bye.